Most traders are weak, addicted to hope, and fooled by luck. Seven-figure traders are merciless with themselves, controlling every emotion, killing hesitation, and exploiting probability. The market doesn't punish mistakes, it annihilates weak minds. If you can't think like this, your dreams of consistent profits are already dead. Most traders stare at charts, hoping a single candle or news headline will make them rich, thinking that the market owes them a win. They wake up, glance at the screen, scroll social media, and call it preparation. They enter trades with half-focused minds, emotions running wild, dreams bigger than their discipline, and expect the market to reward them. Here's the brutal truth: it won't. The market doesn't care about effort, intelligence, or hope. It punishes weakness and rewards ruthless consistency, calm under pressure, and habits that most people don't even notice. If you want to trade like a seven-figure professional, the first secret isn't in the charts. It's in the silent preparation that begins long before a single trade is considered. These traders don't just open a chart and pray for a good setup. They start their day with rituals designed to prime their mind for perfection. Meditation, visualization, journaling, reviewing the mental and emotional state from the day before. They do all this not because it looks impressive on Instagram, but because it builds a foundation the market cannot shake. Imagine a pre-market routine so refined that every movement, every decision, every reaction is deliberate, measured, and unemotional. While average traders are reacting to the market, the elite are anticipating their own responses. They deconstruct not just the trades that went wrong, but the emotional triggers behind those trades. Frustration after a loss, overconfidence after a win. The small impulses that lead to overtrading, these are studied, noted, and corrected with military precision. This is deliberate practice, and it's not optional. It's what separates the amateur from the professional. They understand that talent, luck, or clever strategies are irrelevant if the mind is not conditioned to execute flawlessly under pressure. They practice control like a muscle, strengthening it daily and turning it into an automatic reflex. And it's not just mental rehearsal. Seven-figure traders chase flow state, a zone where distraction, doubt, and hesitation vanish. Techniques vary: deep breathing, focused meditation, visualization of perfect trades, and even body movements that signal to the brain, "No, we perform." When they sit at the desk, they are no longer reacting, they are performing a discipline-based dance where every choice is pre-decided, every risk anticipated. The market may scream volatility, but they remain untouched, unemotional, observing only what is necessary, acting only when rules align perfectly. Most traders never understand this because they believe trading is about predicting market moves, reading candles, or guessing news impact. They are wrong. The market is not something you predict. It is something you survive and master through mental preparedness. Every habit counts. The seven-figure trader reviews prior trades, not just for profit and loss, but for emotional fidelity. Did they panic, hesitate, break a rule? Every lapse is a signal to adjust, not to punish, but to evolve. They maintain meticulous journals recording not just numbers, but feelings, impulses, and reactions. This creates a feedback loop where the mind becomes sharper each day, learning faster than the market can ever trick it. This is the secret weapon no chart, indicator, or AI bot can replicate: self-mastery. While everyone else chases patterns in the market, the elite chase patterns in themselves, and this invisible work compounds faster than any price trend ever could. Now, let's talk about timing and flow. The market does not care if you are tired, hungry, or emotionally vulnerable. But the seven-figure trader knows their mind is a weapon, and they do everything to keep it razor sharp. Exercise, proper nutrition, and sleep are non-negotiables integrated into the preparation process. This is why so many talented traders fail. They focus on the wrong preparation, believing charts are everything. The market exposes weakness mercilessly. Elite traders understand that mental clarity is the ultimate advantage. Without it, every strategy fails, every edge disappears, and every trade becomes a coin toss. And here's the part that shocks most people: this preparation is invisible. No one sees the hours spent meditating, journaling, visualizing, analyzing emotional patterns. No one sees the mental rehearsals or the physical care routines. What people see is a trader entering a trade with calm precision and winning, thinking it was luck, skill, or a lucky candle. They don't realize the victory started hours, sometimes days before, in the quiet, unseen discipline that built an unshakable foundation. This is the essence of a seven-figure trader's secret: habits invisible, relentless, uncompromising. Most traders will never adopt these habits. They are impatient, addicted to quick wins, and blind to the work required to build emotional fortitude. But if you want to reach the level where your mindset beats the market, this is non-negotiable. The preparation is psychological, physical, and deeply strategic. Every habit is a small edge, and the accumulation of these edges creates a margin no market volatility can erase. They are not reacting, they are executing perfection rehearsed thousands of times with rules that cannot be broken and emotions that cannot interfere. Consider this. When a seven-figure trader steps into the market, it is not luck. It is a result of silent, repeated, intentional practice. They have already faced every emotional challenge mentally before the charts even open. They have rehearsed losses, feared outcomes, and rehearsed calm decisiveness. The market may move unpredictably, but they are prepared for every scenario. This is why they survive, thrive, and outperform 99% of traders who rely on hope, luck, or untested strategies. Here's the brutal takeaway: if you don't adopt these unseen habits, your performance is purely accidental. You may have knowledge, skills, or intuition, but without the silent preparation of mindset mastery, every trade is a gamble. This is why most traders fail before they even enter the market. The charts never break anyone. They are a mirror. The only thing that breaks traders is an untrained mind, unprepared for the raw discipline required to execute consistently under pressure. So the question isn't what strategy you should use, or which indicator will finally make you money. The question is, have you prepared your mind to be stronger than the market? The seven-figure trader's secret habits are not complicated, glamorous, or trendy. They are brutally simple, deeply disciplined, and invisible. They meditate, they visualize, they journal, they exercise, and they prepare mentally every single day. And it is this preparation, far more than the charts, that gives them an unassailable edge. If you are ready to step into the next level, start with one habit: observe yourself. Study your reactions, control your impulses, build rituals that strengthen your mental clarity and emotional fortitude. Because once your mind is trained, the market ceases to intimidate, hesitation disappears, and what most people call luck or genius is actually the quiet, relentless execution of seven-figure habits. Every trade, every decision, every movement is a product of preparation far beyond the charts. And that is the secret: silent preparation, mental mastery, emotional resilience, rituals unseen, habits uncompromising. This is where seven-figure traders win before they ever touch a chart. If you want to trade like them, you must begin long before the first candle forms. Your edge is not in the market, it is in yourself. Most traders don't collapse because they don't know what to do. They collapse because they know exactly what to do and still can't do it once emotion enters the room. You've felt it. The plan is clear, the risk is defined, and then one losing trade hits, and suddenly your internal state shifts. Focus tightens, breathing changes, patience disappears. From that moment on, you are no longer trading the market. You are trading your need to feel okay again. This is where most traders lose control, not of their account, but of themselves. After a loss, you tell yourself you're calm, that you're disciplined, that it's just part of the game. But something subtle happens underneath. You start watching price more closely. You feel an urge to act sooner. You want the next trade to work more than the previous one. That desire doesn't feel dangerous, but it is. Because the moment your goal shifts from execution to emotional relief, discipline breaks silently. Here's the uncomfortable truth: losses don't hurt because of money. They hurt because they challenge your self-image. You don't see a red number, you see doubt. You see uncertainty. You see the fear that maybe you're not as good as you thought. And instead of sitting with that discomfort, most traders try to erase it through action. That's why overtrading exists. Not because of greed, but because of emotional avoidance. Seven-figure traders experience the same reactions, the same spike of tension, the same flicker of frustration. The difference is not emotional immunity, it's emotional containment. They don't suppress feelings, and they don't act on them either. They let emotions exist without letting them drive behavior. That skill alone separates professionals from everyone else. Disciplined detachment is where this control is built, and detachment doesn't mean you don't care. It means you care about the right thing. Professionals don't focus on their P&L during execution because they know it distorts judgment. They focus on behavior, on rules, on whether they are executing the process they committed to when emotions were calm. The market does not reward effort. It rewards alignment. And alignment disappears the moment outcomes become personal. Most traders check their profit and loss to feel safe, to feel validated, to feel in control. But the moment P&L becomes emotional feedback, it becomes dangerous. Because now every tick has meaning. Every fluctuation feels like a verdict. And when the market starts judging you, clarity is impossible. Here's a reality most traders resist. If checking your P&L affects how you trade, your edge is compromised. Not because your strategy is bad, but because your mind is unstable. Professionals understand this early. They treat P&L as accounting, not identity. Something to review later, not something to negotiate within real time. This is why high Level traders predefine pain. They don't wait for discomfort to appear and then decide how to handle it. They decide in advance. How many losses are acceptable today? How much emotional fatigue is allowed? At what point they walk away regardless of opportunity? These boundaries are not weakness, they are containment systems. Walking away feels wrong to most traders. It feels like quitting, like giving up opportunity, like admitting defeat. But staying in the market while emotionally compromised is far more destructive. Professionals don't stay because they can. They leave because they should. This creates the internal conflict every trader faces but few acknowledge. The conflict between impulse and discipline, between continuing and stopping, between chasing relief and protecting longevity. One side feels urgent and emotional. The other feels quiet and restrictive. The market rewards the quiet side, but only over time. Losses expose this conflict more clearly than anything else. An amateur interprets a loss as failure. A professional interprets it as feedback. Not feedback about the market, but feedback about execution and state. Was the loss within plan? Was risk respected? Was the response clean? If yes, the loss is irrelevant. If not, the loss is valuable. This is anti-fragility, not just surviving losses, but using them to strengthen decision-making. Every loss reveals something, a bias, an attachment, an expectation. But most traders don't want revelation. They want reassurance. They want the loss to mean nothing. Professionals want it to mean something precise. Another uncomfortable truth most traders avoid: if one loss can ruin your mindset, your position size is too large emotionally. Size isn't just about money. It's about psychological weight. Professionals size trades so they can think clearly even when wrong, because clarity is more important than being right. Emotional fortitude isn't built by motivation. Motivation fades. It's built by repetition, by losing and responding correctly, by closing trades without hesitation, by ending sessions early without regret, by choosing consistency over intensity again and again. Most traders are intense. Very few are stable. They want the loss to mean nothing. Professionals want it to mean something precise. Another uncomfortable truth most traders avoid: if one loss can ruin your mindset, your position size is too large emotionally. Size isn't just about money. It's about psychological weight. Professionals size trades so they can think clearly even when wrong, because clarity is more important than being right. Emotional fortitude isn't built by motivation. Motivation fades. It's built by repetition, by losing and responding correctly, by closing trades without hesitation, by ending sessions early without regret, by choosing consistency over intensity again and again. Most traders are intense. Very few are stable. The inner game of trading is not about confidence. Confidence fluctuates with outcomes. It's about self-trust. Trust that you will follow rules under pressure. Trust that you will stop when compromised. Trust that you don't need today's win to justify your existence as a trader. The market will test you in ways no strategy can prepare you for. Drawdowns, random losses, missed moves, false signals, emotional exhaustion. If your edge depends on feeling good, it's not an edge, it's a liability. Emotional fortitude means accepting discomfort as part of the profession. Not something to eliminate, but something to manage. The moment you stop fighting how trading feels, you start trading better. Calm is not the absence of emotion, it's the presence of control. Most traders crumble after one loss because they never trained for it. They trained for winning. Professionals train for losing well, quietly, repeatedly, without drama. And that is what separates those who survive long enough to master the game from those who burn out, believing the market was unfair. Most traders believe the news will tell them what to do. They wake up scanning headlines, scrolling through charts, following every so-called expert opinion, hoping insight will magically translate into profit. That's where the trap lies. The market doesn't reward attention to noise. It rewards attention to yourself. Seven-figure traders don't get rich because they read more or faster. They get rich because they know more about how they trade, what patterns they create, and how their own decisions respond under pressure. Their obsession is not with external events. It is with the internal dataset of their behavior, their reactions, and their outcomes. The data that most traders ignore is the data that matters the most: their own. Here's the uncomfortable truth: most people avoid the charts, the news, the analyst opinions. They are secondary. What truly separates the average from the elite is a systematic, almost academic approach to self-analysis. Every trade, every loss, every hesitation is recorded, measured, and dissected, not to assign blame, not to inflate ego, but to identify consistent patterns of behavior that can be corrected before they compound into catastrophic mistakes. And because few are willing to face themselves with this level of honesty, most traders never progress past mediocrity. Professional traders run experiments daily. They form hypotheses. If I enter here with defined risk and exit here, I expect my behavior to remain consistent. Then they test those hypotheses against reality. Did execution follow plan? Did emotion interfere? Did the result matter less than the process? Every outcome becomes feedback. Every loss becomes a laboratory. Every win becomes an opportunity to measure whether luck or skill was responsible. And in doing so, they shift authority from market predictions to personal accountability. The market stops being the teacher. They become their own teacher. Most traders chase external validation. Seven-figure traders chase internal truth. They know that obsessing over economic calendars, social media sentiment, or the latest stock tip only creates noise. Noise is addictive because it gives the illusion of control. Checking headlines gives the temporary comfort of being informed, yet it does nothing to improve execution. It does nothing to improve consistency. Professionals, however, curate their information diet with surgical precision. They filter out everything that cannot improve behavior or reinforce rules. Every chart, every statistic, every piece of information that does not answer a question about their own performance is discarded. What remains is actionable. What remains is measurable. What remains is under their control. This is where most traders fail to see themselves. They are reactive to the market because they have no systematic reference to guide them. The elite are proactive because they know exactly what data matters and what doesn't. They can walk into a market flooded with headlines and volatility and remain calm because their foundation is internal. Their obsession with tracking their own metrics, win rate under specific conditions, reaction time to signals, risk-adjusted performance, emotional triggers is relentless. They do not guess, they measure. They do not hope, they analyze. The feedback loop becomes continuous and almost obsessive. And that obsession is not reckless, it is structured, methodical, and academic in nature. Retention comes from discipline. They review every trade, every journal entry, every emotional spike. They compare behavior from session to session. Did yesterday's fear cause hesitation today? Did last week's overconfidence lead to rule breaking? The questions are simple, but the answers are profound. Most traders never ask these questions, or if they do, they ignore the uncomfortable truths. Seven-figure traders thrive because they refuse to ignore reality, even when it is inconvenient or humiliating. Every answer informs the next hypothesis. Every hypothesis creates the next action plan. This is the obsessive learning loop in action. It is quiet, relentless, and invisible to the outside world. Here is another pattern most traders overlook: knowledge without feedback is useless. Reading 100 books on trading psychology will not create skill unless paired with disciplined reflection. Watching hours of webinars will not create clarity unless paired with systematic measurement of personal performance. The elite understand that education is meaningless unless it changes behavior. They know the difference between absorbing information and transforming it into actionable insight. News does not make them profitable. Their obsession with their own data does. And that is why results compound silently while most traders stagnate in noise. They also use curiosity as a tool, not entertainment. Every anomaly, every deviation from expectation, every emotional spike is an experiment to understand themselves better. They don't jump from system to system or strategy to strategy looking for a shortcut. They test rigorously. They measure precisely. They learn continuously. That curiosity creates the feedback loop that feeds improvement. And because the loop is self-contained, personal metrics, personal execution, personal response, it is immune to the volatility of market opinion. External chaos cannot disrupt internal discipline. Most traders avoid this work because it is lonely and uncomfortable. Tracking every emotional response, every hesitation, every micro decision forces them to confront weakness. It forces them to admit bias, impatience, overconfidence, fear, and they resist that confrontation. Seven-figure traders embrace it. They know that improvement is only possible through objective observation, through rigorous self-study, through obsessive attention to patterns in their own behavior. Each iteration sharpens the edge. Each cycle reinforces discipline. Each feedback loop turns mistakes into lessons faster than any external course or mentor ever could. Retention of learning is also reinforced through repetition. Professionals revisit their own data multiple times, not just daily, but weekly, monthly, quarterly. They track trends, compare performance across conditions, note emotional triggers, and refine hypotheses. One loss might teach a small lesson, 10 repetitions expose systemic patterns. They anticipate failure, embrace it, and convert it into insight. The market becomes secondary, their mental models become primary, and those models improve with each loop, each cycle, each session. Nothing is left to chance. Here's the difficult part: most traders ignore this process is never complete. There is no finished mastery. There is only continuous refinement. They are students of themselves, constantly updating mental models, testing assumptions, and adjusting behavior based on evidence. And because the work is invisible and iterative, it rarely creates instant gratification. The market does not announce it. Peers do not notice it. Only results accumulate quietly over time. That's why it is called obsessive. That's why most traders never do it. Ultimately, the edge comes not from predicting markets, not from absorbing the latest headlines, and not from following a guru. It comes from systematic self-knowledge, discipline in analysis, and relentless feedback. Curiosity and authority converge here. The trader becomes both student and teacher of their own mind. The loop is endless. The work is invisible. The growth is unstoppable. News does not make them profitable. Their obsession with their own data does. And that obsession is exactly what separates the millions who hope to profit from the few who actually do. Most traders think discipline ends when the market closes. They believe trading mastery is measured solely by execution, by entries and exits, by profit and loss. That belief is why most of them burn out, crash emotionally, or quit after a few months. The truth is, elite traders know discipline is holistic. It extends beyond screens, beyond charts, beyond numbers. Discipline is a life practice. It starts in the body, flows through the mind, and manifests in every action. You can follow the perfect setup, have the best plan, and still fail if your foundation, your physical and mental state, is compromised. If your mind is tired, your strategy is useless. 7-figure traders understand this and treat their bodies as seriously as their trades. Exercise is not vanity, it is preparation. Sleep is not leisure, it is sharpening. Nutrition is not indulgence, it is fuel for focus. Every meal, every rest, every training session is part of their edge. Meanwhile, most traders sit hunched over screens for hours, sipping caffeine, skipping meals, and sleeping erratically. They wonder why patience erodes, why focus fractures, why emotion dictates behavior. The difference isn't intelligence or strategy. It is energy management, physical resilience, and deliberate care of the vessel that carries their mind. Discipline without rest is fragility. Most traders don't realize that burnout is invisible until it hits. The market doesn't warn you when your nervous system is taxed, when your reflexes are dulled, when your judgment is fatigued. Elite traders anticipate this. They schedule strategic disengagement. They walk away before exhaustion compromises decision-making. Detachment is not avoidance, it is protection. It is an acknowledgement that mental clarity is a non-negotiable asset. They don't chase every tick, every headline, every opportunity. They choose what matters and ignore the rest. The contrast between amateur obsession and elite detachment is stark. One reacts compulsively, the other observes patiently. One is a slave to activity, the other is a master of process. The same market, the same setups, but the outcomes are worlds apart. Accountability is another pillar most traders neglect. Elite traders do not rely on social media tips, hot stock picks, or forums to validate themselves. They rely on a network designed to maintain resilience, to reinforce discipline, to reflect blind spots they cannot see alone. Mentors, coaches, or peer groups provide feedback not for cleverness, but for accountability. They notice when rules start to bend, when habits shift unconsciously, when fatigue undermines execution. For most traders, there is no mirror. For the elite, the mirror is deliberate, constant, and unforgiving. That is why results compound quietly. Not because the trades are perfect, but because the person making them is steady, accountable, and self-aware. Here's the uncomfortable truth. Most traders resist. Mental edge cannot exist without physical edge. You cannot simulate calmness if your body is restless. You cannot execute patience if your nervous system is frazzled. You cannot detach emotionally if your energy is depleted. The mind and body are inseparable tools, and elite traders maintain both with the same intensity they apply to market preparation. Contrast that with the average trader who believes strategy alone will carry them. They study setups, they watch charts, they chase indicators, and they ignore the foundational condition that allows execution to succeed. The result is predictable inconsistency, impulsiveness, and frustration. Attention reset is applied daily. Professionals intentionally switch focus away from the screen, reset mental bandwidth, and engage in activities that restore clarity. A walk, a workout, a conversation, or even silence is part of the process. Unlike amateurs, who only react to market noise and allow attention to fracture, elite traders schedule these resets. They know that a tired mind makes mistakes invisible until it's too late. Every deliberate reset strengthens discipline, reinforces boundaries, and protects the integrity of decision-making. The cycle of attention, rest, and focus becomes as critical as any trade plan. Discipline is also identity. The elite do not separate trading from life. They are not traders only when they sit at a desk. They are disciplined humans. They cultivate habits, routines, and relationships that sustain performance. The contrast is clear. Amateurs compartmentalize, hoping performance will survive neglect. The elite integrate, understanding that resilience is cumulative. Sleep quality, hydration, mental breaks, strategic reflection, and physical training feed into emotional stability, patience, and the ability to execute under stress. Discipline is not a market activity. It is a lifestyle, invisible yet measurable through behavior. Elite traders also practice strategic disengagement from social comparison. They know envy, hype, and outside opinion are distractions. They focus on their systems, their metrics, their preparation. They don't compete against others, they compete against their own baseline. That contrasts sharply with the average trader who checks forums, obsessively tracks other portfolios, and lets social pressure shape decisions. External chaos is unavoidable. Internal chaos is optional. Mastery is maintaining equilibrium within, regardless of noise outside. The accountability network reinforces contrast, identity, and attention management by creating systems of checks, feedback, and reflection. Elite traders extend discipline beyond the screen. They gain perspective, identify blind spots, and maintain composure. They cultivate peers who challenge weaknesses, not ego. They seek insights on execution, not predictions. Most traders have community. The elite have a system. The difference is subtle to an outsider but catastrophic in results. Ultimately, unconventional discipline is not flashy. There are no charts to prove it. There is no instant gratification. The average trader cannot see it, and that is why it feels foreign. It is invisible, but it compounds. Every night of sleep, every intentional rest, every exercise session, every moment of detachment and reflection becomes capital that can never be stolen by volatility. Every ignored headline, every avoided reaction, every accounted for emotional spike is leverage invisible to the untrained eye. This is why elite traders survive drawdowns others cannot, act with composure under stress, and maintain consistency while the majority burn out chasing immediacy. If your body is exhausted, your mind cannot execute. If your mind is fatigued, your rules become optional. If your habits are weak, your discipline crumbles. Seven-figure traders understand this truth and live by it daily. They integrate life and trading, focus and rest, accountability and autonomy, action and detachment. They embody the work silently, deliberately, relentlessly. And that is what separates them from the crowd. Discipline is not a chart pattern. Discipline is not an indicator. Discipline is a holistic, living system, feeding mind, body, and execution simultaneously. The contrast is clear. One who focuses on markets alone falters. One who cultivates life beyond the screen thrives. This is the final layer of mastery. Attention reset, identity anchor, and contrast pattern converge to create resilience that cannot be bought or borrowed. It is earned through practice, awareness, and deliberate structure. The market may test them endlessly, but the foundation they have built protects clarity, preserves judgment, and allows performance to compound silently, day after day. Most traders believe profits are random, that success is a matter of luck, timing, or being in the right place at the right time. That belief is the trap that keeps them small, reactive, and emotionally fragile. The truth is harsh and often ignored. Profit is the natural outcome of unwavering mental discipline, not random fortune. 7. Figure traders know that the difference between surviving and thriving is not market conditions. It is how clearly they think when everything is uncertain, chaotic, or threatening. The edge is psychological, and it is savage. Imagine this: a trade moves against you suddenly. Most traders panic, tighten stops, double down, or act impulsively to recover. The loss is more than financial, it is a shock to identity. Fear floods the system. Impulse overrides process. The mind fractures. That's internal conflict in its purest forms. The tug-of-war between emotional reaction and disciplined execution. The average trader loses because they act on the first impulse. The elite gain because they have rehearsed the impulse, anticipated it, and neutralized it before it ever strikes. They have a pre-mortem plan. They simulate worst-case scenarios repeatedly, mentally running through every possible negative outcome until panic is nothing but data. That is the rehearsal the market never allows for amateurs. Profit isn't about winning trades. It's about responding correctly when losing trades happen. The professional runs experiments on themselves daily. How would I react if the position doubled against me? If a major news event spikes volatility? If I had no immediate exit? They simulate these scenarios not for entertainment, but to condition decisive, unemotional action. The contrast is striking. The amateur acts only when stress hits. The elite act long before stress hits. One reacts, one anticipates, one profits, one survives. Seven-figure traders also operate with an abundance mentality. They do not act from desperation, fear, or urgency. The market is not a lifeboat, it is an environment full of opportunities. The average trader treats each setup as if it is the only chance to survive. They chase, over, leverage, and bend rules because scarcity drives their thinking. The elite, however, Focus on the flow of opportunity rather than any single trade. One loss does not shatter their day because they know tomorrow and the next trade and the next opportunity are all part of a larger system. Scarcity is weakness. Abundance is power. That shift alone separates reactive behavior from deliberate, profitable behavior. Internal conflict manifests everywhere. Every tick, every candle, every pullback becomes a test. Act now or wait, cut loss or hold, chase or stand firm. Fear and desire pull in opposite directions. Most traders act where emotion is strongest. Professionals act where process dictates. This requires clarity that is cultivated, not inherited. Fear exists, but it is acknowledged without dictating action. Desire exists, but it is measured against rules. That is why discipline becomes invincible. It is not absence of conflict, but mastery of response. Absolute refusal to compromise principles is the final layer. Professionals know that each deviation erodes the edge. Over time, small compromises compound into catastrophic outcomes. One late exit, one rule bend, one impulsive decision feels insignificant in isolation but becomes systemic if allowed to continue. They enforce boundaries ruthlessly, risk per trade, daily drawdown limits, adherence to predefined setups. The market will punish anyone who negotiates with fear or greed. The elite refuse to negotiate. Rules are sacred. Principles are absolute. That is the ultimate psychological edge, not intuition, not luck, not timing. Consistency under stress is everything. Minimalism is critical. Complexity creates hesitation. Clarity creates decisiveness. They eliminate noise. Every action has purpose. Every reaction is calculated. No multitasking, no distraction, no second guessing. Most traders clutter their minds with indicators, opinions, and what-ifs. Professionals declutter. They focus only on variables they can control: entry, risk, behavior, execution. That focus produces results. That focus produces calm. That focus produces profits when others panic. Pre-mortem exercises extend beyond trading decisions. They influence life outside the screen. Professionals anticipate emotional triggers, cognitive biases, and systemic failures in advance. They simulate losses, unexpected events, and worst-case sequences to condition themselves to respond clearly, swiftly, and unemotionally. When chaos occurs, they do not react, they execute. The difference between winning big and losing everything is not luck. It is rehearsal, anticipation, and mental fortitude. Internal conflict is inevitable. Fear will arise. Doubt will creep in. Greed will whisper. The difference is the professional does not negotiate with these forces. They recognize them, quantify them, and proceed according to plan. Minimalism supports this by stripping every decision to essentials: process, rules, execution. Emotional noise is irrelevant. Market noise is irrelevant. Outcome noise is irrelevant. Only action, measured and deliberate, matters. Savage profitability comes not from predictions but from neutrality under uncertainty. Professionals train to remain unaffected by randomness. Every scenario has been pre-studied. Every principle has been rehearsed. Every potential loss has been accounted for. Amateurs react. Elites respond. The edge is not in knowing what will happen. The edge is in knowing how you will act when it happens. That distinction is invisible to outsiders but lethal in results. This mindset requires extreme patience. The market will challenge ego endlessly. Opportunities will appear imperfectly. Losses will strike randomly. Emotional turmoil will persist, but professionals endure. They wait for the conditions aligned with their systems. They do not chase the market. They do not seek validation. They trade with discipline, with clarity, with detachment. Every action reinforces the pre-mortem rehearsal, the abundance mindset, and the refusal to compromise principles. Every reaction confirms identity. Every session reinforces control. The brutal reality most traders ignore is that emotional collapse is silent. It begins with small compromises, escalates with hesitation, and ends with impulsive ruin. The elite recognize it in micro moments: the twitch of impatience, the urge to overtrade, the fear of missing out. They correct instantly, before it compounds. The difference is measurable, tangible, and unrelenting. That is why they survive, grow, and compound gains while amateurs spin in cycles of hope and fear. Minimalism also manifests in opportunity assessment. The professional sees many potential trades, but focuses only on those that meet strict criteria. Nothing more, nothing less. Each trade is a test of discipline, not a test of luck. And when executed, results follow naturally. There is no heroism in chasing the market. There is no wisdom in emotional reaction. There is only ruthless adherence to principle and the mental preparation to withstand every possible outcome. Profit is not magic. Profit is the product of clarity under pressure, emotional rehearsal, abundance thinking, and uncompromising adherence to rules. Fear will exist, doubt will exist, desire will exist, but the professional knows that none of them can dictate action. The pre-mortem exercises, the systemic rules, and the mental edge create an environment where fear is acknowledged but powerless. That is the difference between surviving and dominating. Savage profitability is therefore a mindset. It is forged in discomfort, conflict, and repetition. It is sustained by discipline, clarity, and anticipation. It cannot be taught through charts or indicators. It cannot be learned from news or social validation. It is earned internally, daily, in micro decisions, through mental rehearsal, and by refusing compromise. That is why profit is inevitable for those who master it, and why the rest chase hope, fear, and randomness endlessly. Most traders treat preparation, emotion, data, and discipline as separate. They compartmentalize, thinking they can master one without the others. That's why most trades repeat the same mistakes over and over. Strategy alone cannot protect you. Knowledge alone cannot sustain you. Discipline alone cannot elevate you. The truth is brutal. Consistency emerges only when all elements integrate seamlessly into a daily routine. Elite traders understand this. Their edge is not a single technique. It is the system, the repetition, the deliberate integration of mental, physical, and procedural mastery into every decision, every action, every session. Silent preparation sets the stage. Mindfulness, journaling, visualization, these aren't rituals for comfort. They are anchors for clarity. They allow traders to enter the market with a calm mind, free of yesterday's emotional residue. Emotional fortitude ensures reactions remain disciplined, even under stress. Losses no longer disrupt identity, they become feedback. Data obsession converts observation into insight. Every trade, every hesitation, every emotional spike is logged, measured, and analyzed. Rules are refined. Patterns emerge. Discipline beyond the screen through exercise, rest, nutrition, and accountability creates resilience that the market cannot touch. Individually, these components matter. Integrated, they compound exponentially. The difference between repeated mistakes and systematic growth lies in this integration. Most traders overlook this. They prep inconsistently. They react emotionally. They chase data they cannot apply. They neglect the physical and mental foundation. And the market punishes them relentlessly. The elite, however, layer these practices into a loop. Prepare, act, observe, reflect, reset, repeat. Each cycle reinforces the last. Each repetition tightens clarity. Each iteration reduces error. That is the retention loop in action. It is invisible to outsiders but lethal in its effect. Every micro decision is connected to the last, every action informs the next, and every day compounds knowledge, skill, and discipline. Attention reset is essential to sustaining this system. The market is noisy. News is overwhelming, opinions are endless. Without deliberate resets, traders fragment attention and lose control. The elite schedule breaks, walks, meditation, or exercise to disengage strategically. Disconnection is not laziness, it is maintenance. The mind needs intervals of silence to process, consolidate, and reinforce learning. Most traders mistake constant screen time for productivity. The elite understand that clarity is the true productivity driver. When the mind is refreshed, rules are enforced naturally. Emotions are neutral. Decisions are precise. The retention loop continues unbroken. Curiosity drives refinement. Professionals constantly ask, how did I react? Where did I fail? What can I improve tomorrow? They leave open loops deliberately, teasing the next level of insight within themselves. Open loops are not procrastination, they are hooks. They sustain attention, ensure continuous engagement with learning, and create mental momentum. Every session ends with reflection that sets the stage for the next. Every thought, every habit, every pattern is a thread in the web of cumulative mastery. Most traders never reach this stage because curiosity dies when frustration sets in. Elite traders cultivate it because they know the cycle never ends. Integration also requires ruthless prioritization. Preparation without reflection is wasted effort. Emotional training without discipline collapses under pressure. Data collection without actionable insight is noise. Physical health without mental rehearsal produces fatigue, not focus. The elite synchronize all these elements. Each habit reinforces another. Journaling informs data analysis. Emotional control strengthens decision-making. Physical resilience underpins mental sharpness. This creates a self-reinforcing system where preparation, execution, observation, and reset feed one another continuously. That is the loop that ensures mistakes are corrected, lessons are internalized, and edge compounds over time. Most traders fail to internalize this because they seek shortcuts. They believe watching more webinars or adding more indicators will solve inconsistency. The truth is minimalistic but unforgiving repeatable systems, integrated daily, create mastery. There is no hack, no instant shortcut, no external fix that substitutes for the internal loop. And yet, because the loop is invisible, few recognize it until it is too late. Profits appear sudden to outsiders, but they are the product of countless unseen cycles, reflections, and deliberate attention resets. The same pattern repeats every session: prepare, act, observe, reflect, reset. Miss any component, and repetition becomes error. execute all, and consistency is inevitable. Retention loops are reinforced by tracking triggers and outcomes meticulously. Every loss is not punishment but feedback. Every win is not validation but data. Journals, logs, and reflections are not ceremonial, they are functional. Professionals revisit them to reinforce learning, confirm patterns, and adjust hypotheses. One session informs the next. One habit reinforces the next. The loop maintains its integrity only when every component communicates. Weakness in one area erodes the whole system. That is why integration is not optional, it is survival. Without it, traders repeat mistakes endlessly. With it, excellence compounds silently and relentlessly. Open loops also create anticipation for next-level development. Professionals keep themselves mentally engaged by leaving questions unresolved. How will I improve execution under stress tomorrow? Which emotional triggers can I neutralize? How can I optimize data collection to detect subtle patterns faster? These open loops maintain attention, preserve curiosity, and create motivation that does not depend on short-term gains. Amateurs wait for the market to teach them. Elites create their own curriculum, and the market becomes the testing ground, not the teacher. That distinction is subtle but decisive. The attention reset and retention loop combine to produce resilience. Mental clarity prevents impulsive decisions. Emotional neutrality allows rules to remain sacred. Physical vitality supports cognitive sharpness. Curiosity fuels continuous improvement. Each session is connected to the last. Each day compounds prior lessons. Traders outside this system chase results. Elite traders sustain them. They are not reactive to volatility. They are proactive in maintaining the conditions necessary for consistent performance. That is the psychological edge. That is why discipline, reflection, and integration are more valuable than any strategy, indicator, or market prediction. Finally, the cycle is self-reinforcing. Preparation informs emotion. Emotion informs execution. Execution generates data. Data informs reflection. Reflection triggers attention reset. Reset sustains clarity. Clarity reinforces preparation. And the cycle repeats endlessly, improving, refining, and embedding mastery into daily practice. Traders who miss this loop remain trapped in cycles of hope, fear, and inconsistency. Traders who embrace it unlock repeatable value that compounds invisibly. Each session is a building block. Each decision is an experiment. Each habit strengthens the system. That is the power of integration, retention, and deliberate attention reset. Ignore it and mistakes repeat. Master it and consistency becomes inevitable. Most traders end their day thinking about profit. They measure themselves by wins, losses, and fleeting market conditions. That is the trap. Profit is a consequence. Process is the cause. Mindset is the framework that determines which traders survive and which collapse. Seven-figure traders understand this deeply. Discipline beats strategy. Process beats prediction. Mindset beats hope. If you believe otherwise, you will continue repeating mistakes, hoping the market will forgive inconsistency. It never does. The market is indifferent. Your results are a reflection of who you are, not who you wish to be. Identity is the ultimate lever. Most traders operate from a borrowed identity. They follow tips, imitate others, chase trends, and allow external factors to define them. That borrowed identity is fragile. It breaks under pressure, distraction, or failure. Elite traders operate from their own identity. They know exactly who they are as a trader, what rules define them, and what boundaries cannot be crossed. Their confidence is not wishful thinking. It is a byproduct of repeated, deliberate action aligned with a self-defined standard. Every choice reinforces that identity. Every trade, journal entry, and reflection strengthens it. The difference is subtle to outsiders but absolute in results. Discipline is identity. Process is identity. Mental fortitude is identity. When your self-concept aligns with high-level trading principles, choices become automatic. Fear no longer dictates exits. Impulse no longer dictates entries. Every action becomes an extension of the professional you decide to be. Most traders try to adopt rules without adopting identity. They follow shoulds without becoming themselves as disciplined actors. That is why most strategies fail. Identity is the silent multiplier behind every profitable system. Without it, rules are temporary. With it, rules are unstoppable. Minimalism amplifies identity. Complexity dilutes action. Overanalysis kills momentum. Professionals do not clutter decisions with noise, opinions, or hypotheticals. They reduce variables to essentials: preparation, execution, reflection, and reset. Every habit has a purpose. Every thought has a function. Every action either reinforces identity or weakens it. There is no room for indecision. There is no tolerance for emotional shortcuts. Minimalism is not deprivation. It is clarity. It is focus. It is the lens through which identity manifests in results. The average trader multiplies noise. The elite reduce it to zero, leaving only what matters. Psychology over strategy is the final insight most traders ignore. Markets are random. Strategies can be copied, indicators can be applied. But the internal landscape, the mind, the identity, the discipline, the attention is uniquely yours. That is where edge exists. You can replicate setups, follow systems, and mimic signals endlessly, yet fail if your psychology is compromised. 7. Figure traders invest more in understanding themselves than the markets. They cultivate emotional resilience, mental clarity, and a sense of professional selfhood that cannot be shaken by volatility. That internal work produces more consistent results than any external rule ever could. Now consider this: every trade you take, every decision you make, is a vote for who you are as a trader. Each impulsive move reinforces the amateur identity. Each disciplined choice reinforces the professional identity. Results are merely the reflection of that identity in action. The market does not reward wishful thinking. It rewards consistent identity-aligned behavior. If you want to see a transformation, the change must begin internally. The external world, charts, indicators, news, will follow the framework you construct inside your mind. Reflection is critical. Ask yourself, do you trade like a pro? Do you follow rules even when fear whispers? Do you respect risk even when greed pressures? Do you engage in habits that build mental, emotional, and physical edge? Or do you chase shortcuts that produce temporary excitement but long-term inconsistency? Identity is revealed in answers, not intentions. It is constructed in action, not aspiration. Professionals act according to the standard they set. Amateurs hope outcomes will create the standard for them. Short, punchy clarity, discipline beats strategy. Process beats prediction. Mindset beats hope. Internalize that, and your decisions will change. Ignore it, and the cycle repeats. Every missed habit, every unlogged trade, every unchecked emotion is a vote for mediocrity. Every disciplined pre-market ritual, every reflection session, every reset is a vote for mastery. Your identity as a trader is cumulative. It is sculpted with every micro decision, every repetition, every deliberate moment of focus. This is where minimalism meets psychology. Clarity of action produces clarity of self. Identity-based CTA is simple but powerful. Decide today if you trade like a pro or remain an amateur forever. That choice is not hypothetical. It is active. Every trade, every journal entry, every habit from this moment forward either confirms the professional you claim to be or strengthens the amateur patterns you complain about. There is no neutral ground. The market punishes indecision and inconsistency. The elite understand this and act decisively, daily. You must do the same. This is why reflection loops matter. Retention comes from revisiting your own decisions, analyzing emotional reactions, and refining habits. Professionals maintain journals, logs, and micro-assessments. They integrate mental rehearsal, attention resets, and pattern recognition into daily practice. Amateurs neglect these loops and wonder why they repeat mistakes despite hours of effort. Identity grows only through iterative feedback and deliberate integration. Minimalism ensures that each loop is clean, focused, and actionable. There is no clutter. There is no distraction. There is only progression. Consider curiosity as the engine. Every open question about your execution, your reactions, or your habits is a hook to engage attention. What caused hesitation in the last trade? What pattern in emotion repeated this week? How could a pre-mortem have prevented impulsive action? Each question is a loop that feeds reflection, reinforces identity, and strengthens habit. Professionals leave mental loops open deliberately to ensure that learning is continuous. Amateurs leave them closed prematurely, creating stagnation. The market does not forgive stagnation. Identity-based learning does. Every element converges: discipline, process, mindset, minimalism, curiosity, reflection. Each micro-action compounds into a macro transformation. The habits you build now are not temporary, they define your trajectory. The mental architecture you construct today determines whether you survive, thrive, and dominate over the next decade, or whether you cycle endlessly through hope, fear, and inconsistency. Professionals understand this. They internalize it, they act, and results inevitably follow. Ultimately, this part is a mirror and a decision. Look honestly at your habits, your mindset, your preparation, and your attention. Are they aligned with the professional trader you aspire to be, or are they scattered, inconsistent, and reactive? Identity is the differentiator. Discipline is the tool. Minimalism is the lens. Psychology is the foundation. Every action from this point forward is either reinforcing your professional identity or confirming your amateur one. The choice is yours, but the market will reflect it unflinchingly. Decide now. Commit to the process. Follow the system. Observe yourself relentlessly. Reset attention when needed. Prioritize mental, emotional, and physical health. Analyze every outcome. Accept feedback. Refine, repeat. Discipline beats strategy. Process beats prediction. Mindset beats hope. And with every deliberate action, you vote for the trader you choose to be. Decide today if you trade like a pro or remain an amateur forever. Every second you wait reinforces the patterns that hold you back. Every second you act reinforces the patterns that propel you forward. The loop is simple. The principle is clear. The stakes are absolute. You can choose hope and inconsistency, or you can choose identity, discipline, and mastery. The market will reward only one. Who are you choosing to be?